What's going on, guys? TG here, back with another video. Hope you guys are having a great weekend today. Before I start this video, two things. First off, if you guys aren't subscribed already, please do it. It would mean a ton to me. Only about 30% of the people that actually watch these videos are subscribed. So if we can get that up, that's awesome. It means a lot to me. It means you guys are actually liking these videos that we are putting out. So, and number two, if you are subscribed, you are entered to winning giveaways. If you guys know me, you know I love to do giveaways. We've already given out a couple giveaways these past couple weeks, and we're looking to do some more pretty soon. But before that, we're doing the paper trading challenge. I mentioned a couple times. A video coming out on it very, very soon that will describe everything. But if you want entered to win a lot of cash prizes, real cash prizes, guys. We're not doing fake cash. We're doing real cash prizes. For paper trading challenge, hop in the Discord. I'll let you guys know all about it. All you got to do is sign up on my Webull link, and that is where the money comes from for the tournament. So let's jump right in this video. Speaking of money, we like to make money here. That's the whole reason we're in the market. And we're going to teach you how to make some really good money today, which is called the poor man's covered call, or selling covered calls without even owning 100 shares of the company. So I think the best company to do this on, or not even company, ETF, would be SPY, which is the S&P 500 index. Can't go wrong there. And let me give you another reason why we like to do the SPY. Let's go over here to the options change for a second. Let's see if this thing loads up. What do you notice? What do you notice about this option chain compared to other option chains? Well, 1, 2, 3 options a week. 3. That means 3 sets of covered calls a week for Theta Gang. Now, we want to take advantage of every single one of those. You know why? Because there's a lot of money on the line to do that. So, before we do that, we're thinking way too ahead already. Let's rewind the clocks a little bit. How are we going to do this? Well, we're going to buy a deep, and I mean deep in the money, leaps call. So, let's go here. Nope. Yep, something around here. Something around here. You can pick if you want. I'm going to go a little farther out because the farther out, the more covered calls I get to write. And it's going to cost a little bit more, but the theta is going to be a lot less. And as someone who thrives on theta, I don't want to bet against theta. So we're going to go at least September. I like September 30th. Okay, we go here. Now it's sitting at 363.67. Let's go ahead and drop that by at least 30-something points. Let's look at 325, shall we? Boom, 325. 52 exactly. That's an even number. I'm sorry, I'm not feeling too good, but whatever. It's freaking cold in New York, and I can't wait to go back to Florida. So let's jump right into this. Boom, $52 per contract. So obviously we're timing that by 100 because it's an option. So $5,200 this option runs us. Okay, it's a lot of money, I know, but it's better than spending $36,300 to own 100 shares of this company. So let's look at it. Let's look at the Greeks. We usually want a delta above 70, okay? Delta is basically meaning every time SPY goes up $1, this option is going to go up 74, almost 75 cents, which is pretty good, okay? The farther down you go, if you guys notice, like let's say we go down to like 265 or something, that delta is 92, but we're paying 10 grand for it. So we don't really care about that. But that's just making it more like, acting more like 100 shares of the stock, the higher the delta is. So we don't need that. We don't want to spend that much because we just don't want to spend that much. But here we go. So we dropped, where is it? 325 we said? Yeah, 325. So $5,200. Our theta is not bad either. We're only losing $4 a day on that. That's really not bad at all because we're going to be making so much more in the covered call money instead. So let's run some little notes here. We got 52 down. We're negative 5,200 right now. That's our initial. Now we go back to December 2nd. We can start selling calls now because we have that collateral acting as 100 shares. That leaps call is acting as our 100 shares because technically one call is 100 shares and it's in the money, so we could exercise it at any time and cover the 100 shares. But we don't want to do that. We never want to exercise our long call because we have a lot of extrinsic value right now with that call. The time, the future looking is what makes our call so valuable. So the more time we have ahead of us, the more valuable it is. Okay, and that's the value. That's the intrinsic value of it. So what we'd go ahead and do is we'd sell a call. And I'd probably sell a 366 call. To be honest with you, depending on how the day starts, I'd probably sell like a 366 call. Now, If we don't want to sell it on the 2nd, we want to do a different day instead, we can go ahead and do that as well. We can choose like the 4th or the 7th. But I think for this sake, we're going to do the 2nd, December 2nd. Looks like a pretty good one because that's Wednesday. Mondays, obviously, Robinhood does not yet have the option to do same-day expiration, but they are. I actually emailed them and got a good response back. They said very soon we will have that option, so that's awesome. So let's start right now with this. Let's go ahead and sell a 366 call. It's $126 right there. So that's 1 day a week. We got $126, and we gave ourselves some room. We got ourselves $1, $2, $3 higher than what it is now, which is awesome because that means it goes up. Our long option is worth more, obviously, because it's going up. So that'd be $150 for $3 because it's 75 cents per. And this short call is worth $126. But look at this thing. Look at the theta on this option. 20 cents. That's huge. So every day this option's worth 20 cents less, which is pretty awesome. So literally 1 day goes by, the option's already worth $1. Another day goes by, the option's only worth 80 cents now. So we use theta to our side. Theta obviously is a lot more as the option becomes closer to expiration. So we're going to use that to our advantage. So boom, we got $126. Let's play a couple scenarios because a lot of different scenarios could happen. SPY trades sideways. Okay. We collect all $126 from that premium. Our regular option, our long leaps option, goes down a tad bit because of theta. $4 a day, we said, if it doesn't do anything. Okay, let's say SPY goes down. We can still collect all $126 of premium, and our long option goes down more because of the delta. So let's say it drops $1. Well, we lost $75 because that's what our delta for that option is. But we collected $126. Now, let's say SPY goes up. It goes to 365. We're still collecting that $126, and we're getting $150 because the option went up $2. So 75, 150. Now, what happens if SPY absolutely moons and goes up to 368? Well, we're in trouble now a little bit. We're going to have to buy that option back. This one, the short one. We're not exercising the long one. We're exercising this short one. This one that we sold right here. Okay. We'd have to buy to close it, obviously, because we don't want to exercise our long option. We would buy to close it, and we would roll it over. So when we roll it over, we're taking a small loss on this, potentially, depending on where it is. If it's at expiration, it's only $1 above. Well, we'll still be up $26 because there will be no more theta left to collect out of this. So it'll only be worth $26 rather than $126 now. But obviously, if it's more, it's going to cost a little more. So let's say it goes up to like that. We would close it out. We'd buy to close, and then we would sell another one for December 4th for a higher strike price. So if it's at 368, we'd then go and sell it for 370. This would be worth a lot more, obviously. And essentially, we would do that. So worst case scenario that happens is our option, our short option. That's what we call it. We're calling these ones the short options because they're not long options. They're short. It's technically a bearish stance to sell a covered call. Okay? Even though we're using it as a slightly bullish stance. Now, we would go ahead and buy it back and then sell one for another strike price, a couple, 2 more days out, and we do it for a little higher than it is now. Okay? You could also, if you wanted to, do it for next week and collect a lot more premium instead. So as you guys notice, if the difference between December 7th and December 2nd is very huge. We look at the 366. This one's $126. This one is $236. So the more time, the more premium you get, but the less times you can do it. So realistically, the most ideal situation for us is we go ahead and sell a covered call, and the stock slowly rises and gets to about here. If we sell at 366, we want it at like 365. That way, our long option goes up, and we make money on our short option. So there's a couple different ways to do it. Obviously, you can do this multiple times a week on SPY if you wanted to. Or you could do, once a week, once every month. If you look at it and you want to go like December 21st, obviously you're going to get like $531. But there's only 12 months in a year, so you're only able to do that a couple times. So you got to be careful about what you're doing, and you can really make some good money on this, guys. like I said, it's acting, your long option is acting as like $36,000 would normally get you, and you're only getting it for 5,200. So we'd have to average a pretty good amount of money a week if the stock just traded sideways. But if it slowly goes up, we make money on our long call and we make money on our short calls every single week because we're squeezing out premium. Okay, so, and the thing is, a great strategy to do, let's say you have SPY and SPY goes down after you wrote this covered call. Well, it's going to be worth like nothing between the delta of 34 and the theta of 20. That's half the option gone if it drops $1 on one day. So you can close it out 50% profit. Let's say the stock goes up the next day, then you can write it again. And you can really you can roll this thing multiple times and really try to make some good money out of it. But that's essentially the poor man's covered call strategy. And you can use this to your advantage. I'm actually going to do this once SPY has like some sort of correction or dip, and let's say it goes down like 5% or so, I'll go ahead and buy a deep in the money call and do this every week to get some more extra premium. But as you guys notice, if you want to be super aggressive as well and, write like a 365, only give yourself like $1.50, you can make some good money every week. I'd do a little bit more, probably a 367, 366. You're getting like $300 a week. Okay. You add that up over time, that's a lot of money. That's a lot of money. So use that to your advantage. And let's say we get 1, 2, 3. So let's say we got $130. Let's pull out the calculator quick. We get $130. 130 times 3 times a week. That's $390. And we have 52 weeks in the year. $20,000 a year that we could get out of that. Now, realistically, there's going to be times where we lose money. So we're obviously, let's account for that. We lose like a couple hundred here, a couple hundred here, like $1,000 in total. With that, we're losing some money, but we're still making really, really good money on those covered calls in the year. And the best thing is, we still have a long call. So let's say SPY continues to go up, our option is going to be worth a lot. We go back to that option we were talking about. Where is it? September 30th. And we go down to the 25 call. Our break-even price is $377 for that. So let's say SPY goes to like, let's just round that down to $375, and SPY goes up to $400. That's good money right there. That's 25 times 75. So let's add that up, because it's 25 for how many points of appreciation times 0.75. That's an extra $1,875, because obviously we times it by 100. So that's an extra $1,875 of appreciation we got on that long call, plus we made like $19,000 from that short call, all for a small risk of $5,000. That's the poor man's covered call. That's why I'm going to start doing the poor man's covered call, and I'm hoping to make a lot of money weekly. We're Theta Gang. We like making money every single week, consistent premium. This is the best strategy for it. Guys, this is a longer video. It took some research as well to really find out the best ways to do it and the best stocks to do it. I hope you guys enjoyed. If you did, please hit that like button. It means a lot to me. Get ready for this challenge, guys. It's going to be big. A lot of cash prizes on the line. You want more videos like this? Let me know in the comments below. Have a wonderful day, guys, and just keep riding on. Let's keep making money. Let's keep making money using Theta, and just hoping that our accounts continue to grow. So, guys, it's been a pleasure. Talk to you in the next video. Take it easy, guys. Bye.